Good evening, everybody. So remember, we have categorized the technical analysis tool into three groups. One is a trend, margin, and then strength. Today we'll touch on candlestick, which is one of the tools used to measure the strength. Okay. Then on the next section we'll cover volume and smart money, and that will be our complete training of the session. Okay, from previous, we know that the fundamental analysis will help us in deciding which stock, and the technical analysis will help us in when to enter at what price. And we also cover trend and margin. And today we'll start to cover the candlestick on the strength, which will help us in making the final buy and sell decision. Since it's important for us to look at candlestick and volume before we click the buy or sell button. Now, okay, you can see this is the candlestick look like. It has a few components. One is the body, can be green, can be red colors. In KLSE setting, in other country setting might be different color. And the after the body, it has a shadow. On top of that, we may call it upper shadow and bottom shadow. Okay, this shadow is formed probably due to for the stock price open at, remember, 10 ringgit, and then it may hit highest 10.75, probably lowest in the day in 9.25, and then at about 5 p.m. Market close, it closed at 10.50. So the market close, the stock closed at a higher share price than when it opened, market open. So it gives us the green color in KLSE setting. Well, for red color, but probably market stock open at 10.50, highest at 10.75, and what probably lowest at 9.50, and it closed at market close time at 10 ringgit. So it closed at the lower share price than when market open. That's why we're given the red color. Okay. So sometimes the shadow disappear. There's no shadow. In this case, there's no upper shadow here. The same theory apply. Probably the market open when the stock 10 ringgit, then you go to the highest 10.50 and lowest at 9.25, and it closed at 10.50 if the same price at the price when the highest. So of course it's green because it still closed at a higher share price than market open, but there's no upper shadow because the highest price is the same as the close price. And sometimes we see there's no body. There's only the cross like that. This is probably because market open, for example, at 10.50, then highest at 10.75, lowest 9.50, and at the end it closed at the same price that it opened. So this is called doji, a Japanese word. Market closed at the same price as it opened. Okay. Now candlestick, basically a daily candlestick show the markets open, high, low, and close price for the day. So depending on the setting of the time frame, it can be hourly, by minutes. If you go to the trading view, you want to see, you change the time frame. There's a D here, basically default, mostly default at day, 1 day, daily. You can actually click the day and change to whatever time frame that you like. But mostly I will use basically just either 30 minutes, 1 hour, or 1 day to see the current sentiment of the buy-sell activity. Candlestick works based on the theory that traders trade using emotion, which can be shown in the candlestick pattern. So candlestick commonly used to describe what the buying and selling activity are like or up to at this moment. Okay. So together with volume is become a good tool to look at just before we decided to click the buy sell button. Okay, now we move to how we're going to recognize the signal of the candlestick, whether the signal is for us to buy or sell, either buy or sell signal. It could be buy or sell, but it is a strong signal or is it a weak signal. And also there's one signal called indecision. They say the market cannot make the decision want to go bull or go bear. It's an uncertainty. Okay. Now we move on to the first one first. The first pattern was formed by 2 days. You can see this is 1 day and second day. Day 1, day 2. So you can see that basically the first day 1, the price opened at higher, then it moved down at the close of day 1. And the next morning, it get down even lower. It jump a big jump, then it go up to the top more than that. Okay, basically the bulls reject the gap down. He got down, but he moved bigger. This is a very strong signal. Huge normally happen when there's a huge buying after the price press down for some times. This will happen. Okay, it's a very strong signal. This is the signal you need to remember. The name bullish and Gavin pattern, all this name, fancy name, you may not need to remember. You only need to know when you need to communicate with another analyst and what you see this. Or else we don't really need it. Just using the common sense, understand the red color mean what, this move to here, then the big jump, then go out to here. So from that, try to understand the emotion of the traders. The reverse is bear and Gavin pattern. It's the same. You see the color change. Here is different. The day 1 actually start with a lower price, then it moving up. And the next morning, the market open, there's a gap up, jumping up. I mean, there are people want to push up the price. But eventually, the price drop and in fact lower than the day 1 opening price. We call it bear reject the gap up. This is a very strong signal also that the market is going bearish, is going down. This happens mostly when there's a profit taking after they push up the price. Okay. So this is an important pattern that you need to remember. Another strong signal ahead is called harami. Harami in Japanese word means pregnant. So I draw this picture. All this picture just for us to visual understand, remember. For us easier to remember because you know that in our training also majority of population are more on visual to interpret the information. So basically I draw this mother bull, a baby, this bear, then we can see the big shadow bear coming in. Basically, I always want to highlight that the super bear is in the making. It's a strong signal for bearish. So day 1, you can see that the price start from lower, then it close up higher. Then the next day, there's a gap down. And note that there's no shadow at the end of closing when the market closed. I mean, remember I told you before, the momentum still continue. So the more usually the day 3, the price will continue dropping down. So this is a very strong signal for bearish market. Okay. The reverse is super bull in the making. Again, I draw this mother bear and the baby bull, and there's a shadow big bull is making. Super bull in the making. So a strong signal for bullish. So not to mislead it, or you see a small one, not important now. When you see the big red color and small green, especially there's no shadow one, it means that the momentum is continuing. It's a very strong signal for being bullish. Okay. So another one, the strong signal is they use the 3 days. When they have this day 1, day 2, and day 3. Day 1 start at a low price, going up, and the market close. The next day there's a gap up. Then after that, there's another day, another gap down. So there's a gap in 2 consistent days. This is a very strong signal for this case is bearish because it's going down here. You can see the gap here basically show that trader queue to sell at a much lower than the current price, even before market open. So for example, let's say, of course, it didn't happen to Top Glove. Some people may know, let's say Top Glove was actually 7 ringgit yesterday. So when market don't even open, people start to queue to sell at 650 or say something. So there's a big strong sign of actually market bearish for this stock. In reverse, morning star, this evening star is morning star. This the currency different, the direction also different. Now market start at the open, the higher price, and it close at the lower price. There's a gap now on the day 1, and day 2 is a gap up. So again, there's a consequence. 2 days of gap up and down and up. This is for this gap so that trader queue to buy at a higher price at the current price before the market open. So now maybe it's 5 ringgit. People be queuing. I don't mind. I buy at 550 or 530. So they want to buy the higher price. They can't wait. They want to queue it. So it shows that the market is quite bullish for the price going up. Another strong signal ahead. This one rarely happen, but it also happen. You can see from here the emotion. The market start from here, then it going up, and 5 o'clock it close here. So there's no shadow here. People will see that the momentum is to continue, is to go up. But surprising day 2, it actually go down at all without the shadow. This usually happen is when something huge and unexpected happen after the market close. For example, in this case is very bad QR come out, quarterly report come out very bad, unexpected, or big announcement like Top Golf or whatever factory fire or any issue. This will happen. This is called twister for you to remember, because you see it look like a twister. There's a flat top, especially when on top here is resistance. Then make it very strong sign for strong sell sign is going down. In reverse, you see the flat is at the bottom. It hit the support. You can see from here the sentiment is start with the higher price. It's going down here, supposed to go down further, but no. Maybe at night they announce that they find something, vaccine, everything, medicine or effective, something good news or very good QR, better than expected, and the next morning it shoot up direct without going down any further. So it's a reverse inverted twister. Okay. Now price gap also is a very important pattern to remember. Okay. There's a price gap up and also a gap down. Gap, you see that basically there's no side by side, there's no parallel, there's a gap between day 1 and day 2. Even up and down, it's day 1 and day 2. For gap up, it usually form a new support. When it from here, it jump to here, this area become a support. BLC maybe is from this line. So after the gap, it become this new support. Okay, but it depends on the pattern. If the candlestick is quite short and it's narrow gap here, usually it's a good indicator for us to enter, because it form a new support. Especially start with a good fundamental analysis. So if form a new support, it's safer for us moving up. However, if there's a long candlestick that I show the Pharma Niaga as an example, there's a 2 days very long candlestick, and also the long this huge gap. You had to plan to exit. Most likely people were going to start profit taking very soon. Okay. For gap down, it form a new resistance on top. Maybe this is a resistance beginning. So when it hit, then go down here, it gap down here, become a new resistance. So it's very bad because resistance become lower. So that means the price won't go up much. So disaster usually already happened when you saw this sign. They form a new resistance at the lower. Okay, weak signal ahead for us to know so that we don't panic and take unnecessary action. Okay. For this, you can see emotion is that it start at the lower price, moving up here, a gap up, supposed to be good, but it go down here. Anyway, it doesn't not longer than the green bar on the day 1. It's different from the first 2 signs that I show you, the strong sign, because it's not longer than the day 1. Okay. The reverse, same. This one is start at the higher where it go down and moving up, but still it doesn't mean that it's going to be bullish. It's just a weak sign of being bullish. Okay, all right. So not to panic in this to take action. The other one signal is they all look like a hammer, whether the hammer, inverted hammer, but there are few names of that. Okay. Now when I draw this for you to remember, when you see hammer at the down there, at the downtrend there, at the down the price, when down price down, you just imagine there's a people go to fun fair, they hit the hammer. Now when you hit hammer, there's something, the ball and ding dong the thing on, but not necessarily the ball will hit the top. It depends how strong you are. So this implies there is a weak signal to go up, weak signal to go up. Okay. The other thing is the hammer is at the top trend there. The name is called hanging man. Hanging. So for us to remember, I put that it's a weak signal to go down. Just like not all traders go to hell, they all die hang there, but they not necessarily go to hell. So it's still a very weak signal to go down. We need to know that this is called this hammer whatever, right? green and red color doesn't matter. Whether it's inverted, or not inverted also doesn't matter. What matter is when this happens, is either at the bottom or at the top. At the bottom, that means it's a big sign to go up. At the top, it's a big sign to go down. That's all. Anyhow, it's quite a big sign. So not to take drastic action in this moment. So you see this, the inverted hammer. I mean, just now the head is on top, now it's below. So this one, remember toe, toe is going to pull up the inverted hammer soon, but he might not be successful. First time is not successful. And normally the hammer is at the ground. So just imagine this at the bottom price, there's inverted hammer, but it may not necessarily able to go up. If it's on the top, they call it shooting star. Just imagine the shooting star is falling down from sky, but doesn't mean that your dream show will come true. So it's a weak signal to go down. Again, it doesn't matter whether it's inverted hammer or it's a shooting star, hammer or inverted hammer, whether it's a green or red color, closing at the higher price or lower price. We are more on this pattern happen whether at the downtrend or the uptrend there. If at the downtrend, it's very weak signal to go up. When it's uptrend, it's a weak signal to go down. Again, it's just a weak signal, not necessary to take a drastic action on this. Another signals or a doji one is called indecision. Okay, one a doji is called dragonfly because it looks like dragonfly. This is happening when it open at a high price, it going down, but it closed at the high price as the price is open. Just imagine the dragonfly want to go down, but it keep flying up. So it's a weak bullish signal. The other one is the gravestone doji. The price try to go up, but fear it come down to the same price when it started the market. No, keep pulling down at the underground. Okay, so weak bearish signal. When you see doji, it's not the time for us to know anything. Also, it's wait and see situation. Okay, I have here a quiz on candlestick. If you are watching this as a recorded video, you can pause at each question to think of the answer before they are reviewed. Okay. So question 1, ask yourself whether it's a strong or weak signal and whether it's signal to buy or sell. You can see here, emotion here start from lower, going up here, there's a gap, and then going down here. Okay, but it's not longer than the first one. So there's some buying effort to push up the price, but fail. Okay, it's a weak signal to sell because it's going down. You wait and see. However, we can consider look into making a sales activity if we hit the resistance on top here. There's a consideration to make. Okay. Second, okay, the price start at the lower, going up here, and the next morning is for the gap up, and it go down at the longer than what? And longer than the first day. So the bear reject the gap up here, but it's going down very strong in the longer state. So whether it's a strong or weak signal or a signal to buy or sell. Okay, actually it's a strong signal to sell, especially when it hit the resistance or the price at the top Bollinger Band. So it's a strong signal to sell. It's time to run. Okay. Question 3. This one, when you see they are using 3 days, day 1, day 2, and day 3, the price going up, then there's a 2 gaps in 2 consistent days. Gap continues for 2 days. Okay, because it's going down, then we know that it's bearish. But this is a strong or weak signal. It's a strong signal to sell. Okay, especially when there's a resistance and top origin band on top. Question 4. Okay, it started at the higher price going down, but the next day it also offers some hope for us to go up. Anyhow, it didn't longer than the first one. So is this a strong or weakness and a better signal to buy and sell? It's a weak signal to buy. However, you can consider to buy if we break resistance or bounce as support. But basically all this, when you want to break the rules, You have to support with a very good fundamental analysis. Okay. Question 5. He opened it at the higher, going down. Then the next day, he going down some more. Panic. But anyhow, at the end of day 2, actually he closed at a higher than the first day. So what we expect the day 3 is a strong or weak signal to buy or to sell. Remember the bull, they're rejecting the gap up and it's moving longer than the day 1. This is a strong signal to buy, especially when it hit the support or the middle Bollinger Band and bounce back from the support here. Question 6. Day 1, day 2, and day 3, there's a gap between the in consequent 2 days and going up. This is very strong signal to buy, especially when they hit the support down there or middle BB and bounce back on day 2. Question 7. Okay. Day 1, the bar is very long, day 2 very short, but there's a difference in terms of buy sell activity. Day 1 is stuck at quite low, moving up by the gap down, and know that there's no shadow. Must very alert when there's no shadow. That means there's the unfinished business going on. Okay, is this a strong or weak signal? So we buy or sell. Now there's no shadow on day 2. Price drop, momentum continue, expected. So it's a strong signal to sell, especially when it's a nearby or hit a resistance or top Bollinger Band. Question 8. You see that there's no shadow at the flat bottom. This is a twister. Twister. Price is going down. We expect to go down, but the next day, surprisingly, going up. This is a strong or weak signal and a signal to buy or sell. This probably there's a positive catalyst news on day 1 after the market close, and a strong signal to buy. This is basically when the fundamental analysis take over the technical analysis, especially when near support, not necessarily hit the support, but quite near, with a good fundamental analysis report come out near the support or bottom or middle BB. Question 9. Now there's no shadow on top. The day open lower and close at the higher, we expect they go up, but at night factory was caught fire. The next morning it go down like that. So definitely it's a very strong signal. It's a negative catalyst news on the day 1 after the market close. Then it's definitely a good strong signal to sell. So you can see that when I describe to you, we are trying to look into the emotions. We see here, you see why like this happened and this happened. It's basically emotion. Then from here, we know actually what was in the traders' mind when they are involved, participate in this transaction. Especially when near the resistance. Question 10. Okay, market open at high and close at lower. And the next day is open up, a small difference, but there's no shadow on top. Okay. So ask yourself whether it's strong or weak signal, or whether it's a signal to buy or sell. There's no shadow on day 2. Price up, momentum expected to continue. There's a strong signal to buy, especially when the support is nearby here, not necessarily here, but nearby here, or the bottom or middle Bollinger Band. Okay, this is the doji. Doji, there's no body one going up and down. Remember doji, you can just ignore about it. It's basically a very weak signal to sell or buy. Not significant whether sell buy, basically weak signal. This happened normally at the end or a near end uptrend now because they lost momentum to go down. The reverse is true also. Okay, question 12. What is this signal? You can see that there's a price here, but there's no parallel. It suddenly jump up. This is the price gap up, up. So note that if the candlestick is short, this is short and quite narrow, and in this case, new support normally is formed and consider a good time to enter if there's a good fundamental analysis support. However, if the candlestick is quite long, suddenly shoot up and a very huge gap in between two candlestick, to one between 2 days. We caution mostly it was pushed up by those investment bank and profit taking expectation. So it's best to exit now and enters at a later date or price. Okay, remember the hammer. This is inverted hammer, or you can call hanging man or shooting star. It doesn't matter whether it's green, red, like this or like this. We look into this happen at whether at the lower trend there or at the up trend there. Okay, at the bottom here, it's just a weak signal to buy because it's weak signal to go up. It may not go up. At the top, then it's a weak signal to sell. I mean, it may not go down also. Okay, so it's wait and see position. Now there are some variation in candlestick. In this, this is trading view. So there's a setting. You click here. The default is give us a candle. You can change others. There's one among there. There's one popular is called Heikin Asi. Heikin Asi. Heikin Asi means average bar in Japanese. It used to identify uptrend or downtrend. So it's slightly different. When the variation is take place, it's no more mean so much in emotional bias. They have used it to identify uptrend and downtrend. So I put it here just for your information, for knowledge. Okay, now we look at the screenshot of the Supermax daily chart candle. So I just point out a few identifier. So you can see here, there's a small red, then followed by the big long green color one. And the day 2 is bigger than the day 1. So basically this is something like bullish and going pattern. It's a very strong signal for going up. Of course, when we analyze a stock, we don't go and see the previous. We see today only because remember the candlestick volume is we use it when we want to buy now. So we see today. Like today is doji form. This one I took it when I think afternoon. Let's say it's 5 p.m. like this. I mean it's uncertain. Can't do much anything. You still have to wait and see. So the other setting, you notice there's a gap jumping up. You see when the gap jump over, especially together, jump over this support line. So it used to be resistant. When the price is here, this is resistance. So when it jump up, it successfully become a support already. It should be resistant. You see red color cannot go up. When they go up, there's some gap here. I mean, we are sure that it's safe time to enter, especially the fundamental analysis is quite good. Then this is form a support already. But what happened next few days, things will be different. Remember, because candlestick and volume is basically talk about these 2 days. We can't really see too far away from that. Okay. So this is basically a gap up. Then you see here, this one because the box quite big. We want to see the small green and the big red color. It's reversed with the bullish engulfing pattern. This is a bearish engulfing pattern. Small green and a long red color. This is the bearish engulfing pattern. Okay, so definitely it's a time to run. It is time to run. It's quite accurate. So okay, now we work on the show you some demo how we do some change of the setting, hourly and minute setting at a skin IC. Now this is Supermax. So to change the setting of the day timing, we click here, then we can change here. So let's say this today. Let's say now is about 4 something. I want to buy one. Normally I will go for 1 hour and see what the 1 hour what happened. For 1 hour, people start to buy. You see green color. There are some changes. So at least I will know at this moment, this 1 hour what happened. Sometimes I go for 30 minutes. 1 minute a bit drastic. I find that drastic. 30 minutes, people still buying. So we know that they are buying. This is 30 minutes. The previous 30 minutes, people starting buying. So from here, I can agar the emotion whether to go in or not. Okay, default is actually there. Then you want to change for the other variation is this chart, and you can go for KLSE. So you can see the pattern look alike, but actually it carries different meaning anyway. You cannot say this price, start from here and come down here, the low price, high price, no more. It doesn't mean that anymore. It basically show about the trend. Here it just tell you, oh, it's uptrend. Here is downtrend only. But for me, I don't really like it because it gives you some delay, a bit delay information. So at the end of this fourth session, the take-home value is always refer candlestick and volume. Volume will be next session before we click the buy sell button. Okay, and identify only the strong candlesticks pattern to confirm the signal that we get from support resistance, like Fibonacci retracement EMA 25, and whether the price high or low by Bollinger Band. Okay. So assignment have been sent to your. Please do the assignment after the market close. If let's say you're doing the PIE, so do a PIE after at night after 5 Then let me know which date that you're doing analyze the candlestick. So at least I can cross check the exact candlestick you refer to. If not, if you do it in the morning, when I look at it the next day or different timing, then I may see different candlestick pattern. Okay.